In China, the digital yuan or e-CNY has moved from pilot phase into full strategic development, signaling Beijing's ambition to make it a cornerstone of its monetary system. The People's Bank of China has rolled out the digital yuan in major cities and even extended trials to Hong Kong, showing over trillions of yuan in transactions. This currency is not a typical crypto in the sense of decentralization. It is a central bank digital currency, CBDC, issued and controlled by the state. From a stability viewpoint, it ticks some boxes. It is backed by the Chinese government, has legal tender status within China, and is part of an infrastructure with massive resources behind it. For a beginner investor wondering, is this stable enough to hold or buy in 2026? There are strong arguments both for and against. On the pro side, the institutional backing and regulatory clarity inside China give it a level of stability rarely seen in speculative crypto assets. It is not primarily designed for wild speculation but for payments, trade settlements, and perhaps eventually cross-border use. That means the volatility you see with many meme coins or altcoins is less likely here. On the con side, because it is state-controlled, its growth potential as an investment or speculative asset is constrained. It is less an asset to buy and hold for profit and more a tool of monetary policy and technological leverage. When we compare this digital yuan with Bitcoin, the difference is stark. Bitcoin is decentralized, global, limited supply and highly speculative. Its value fluctuates wildly. The digital yuan, however, may never achieve that kind of scarcity or independent growth because its issuance and use case are tied to government policy. With Ethereum, the comparison is different. Ethereum is decentralized, programmable, supports smart contracts and a vast ecosystem of DeFi and dApps. The digital yuan is not built primarily for open DeFi or global speculation, but for controlled payment systems and international trade integration. For a beginner thinking about, should I invest in the digital yuan in 2026? You have to ask what you mean by invest. If you expect large gains like you might hope from a high-risk crypto, you may be disappointed. If you are looking for a lower risk exposure to digital currency adoption in China, it might make sense. But even then, your access and usage are likely to be limited by regulatory and geographic constraints. In terms of stability for 2026, the digital yuan benefits from China's push to internationalize the yuan, to create payment rails in Shanghai, and to build blockchain hubs for cross-border services. These developments suggest a solid foundation, but stable in this sense doesn't mean fast-growing investment. It means likely to work as intended rather than likely to deliver large returns. Bitcoin and Ethereum remain far more volatile but also far higher risk-reward. For example, during major bull runs, Bitcoin has multiplied many times, whereas the digital yuan won't likely behave like a speculative asset. It might behave more like a currency or digital version of fiat. Another factor, beginners often favor asset I can trade easily and see big moves. The digital yuan will not likely give that. It might require understanding of Chinese regulatory environment, usage limits, wallet eligibility, and possibly restricted access. Meanwhile, Bitcoin and Ethereum are accessible globally, traded on many platforms, with many educational resources. So for simplicity and global reach, a beginner might still prefer Bitcoin or Ethereum. That said, if one's goal is long-term exposure to digital money infrastructure rather than short-term profit, the digital yuan could be interesting. In 2026, as global payments, CBDCs, and digital trade become more important, being early in the digital yuan ecosystem could pay off, but again, not the same kind of outsized profits as high-risk tokens. A beginner should therefore proceed with caution, treat the digital yuan more as diversified exposure than moonshot bet. Compare that to Bitcoin, where someone might allocate a small percentage of risk capital hoping for huge gains. With the digital yuan, you might allocate a small percentage of stable capital aiming for structural exposure. If regulation in China becomes tighter or access becomes more restricted to non-Chinese residents, that could limit the benefits. Meanwhile, the regulatory uncertainty around Bitcoin and Ethereum remains global. One major advantage of the digital yuan is potentially lower volatility in its role as digital fiat or near fiat. But that also means its upside is limited. The big question in 2026: will the digital yuan gain enough international traction to meaningfully compete with the dollar or other global currencies? If yes, stability improves, but investor gains might still be modest. If no, access and usefulness might remain mostly domestic. In conclusion, the digital yuan in 2026 could be one of the more stable digital currency plays, especially inside China, but it is not a substitute for high-growth crypto investment. For global beginners looking to invest, Bitcoin and Ethereum still offer higher risk and reward. The digital yuan offers lower risk but also lower reward. Choose your exposure based on your goals, profit versus structural adoption.